we are starting the next chapter, that is in volume 1. This is chapter 1, that is accounting for non-profit organizations or not-for-profit organizations. From this chapter you will be getting 10 marks question, it's not one 10 marks question. The division is there will be one question of 1 mark from this chapter. Then 6 marks question will be there, 6 marks, again one question of 6 marks. So that is 6 plus 1 7, then one question of 3 marks, that is the usual pattern. So 10 marks is the weightage of this chapter. 10 marks means it is again important portion. We are going to learn financial statements of NPO. Before that, let me tell you that volume 2 is over. With that, issue of debentures, redemption is there in the textbook, but that chapter has been deleted. So only accounting for share capital and issue of debentures you need to learn from volume 2. Okay, so what is NPO? Non-profit organizations, or usually we refer it as NPOs. The name itself says the organizations which have the main objective as welfare of the society, or their purpose is to serve the society. Normally for every business organization, the main purpose of running their organization would be to earn profit. Of course, that would be the main objective. But for NPOs, their main objective is to serve the society and its members. It is not profit maximization. So members will voluntarily contribute to the organization. I mean, they will contribute funds to the organization, donations would be there, subscriptions would be there. All these would be the income of NPOs, because we are not making any profit. So for the existence, the donations received from members, the funds received, the grants received from government or any other institutions, all these will be their income. Then examples of NPOs you would be knowing, isn't it? Public hospitals, we can say they are examples of NPO. Charitable institutions, then government schools, government colleges, then we have like clubs, like sports club, arts club, or cultural societies. All these are NPOs, non-profit organization. So what we have to learn in this chapter is the financial statements of NPO. Already you have learned financial statements. Last year you have learned, no? That is the financial statement of profit making organizations. But now what we are learning is non-profit organizations financial statements. So last year we learned trading P&L and the balance sheet, that is the financial statements of sole proprietorship firms. Now for NPOs we have 3 financial statements. One is receipts and payments account, the second is income and expenditure account, and the third one is balance sheet. These are the 3 accounts which we have to learn. Now normally receipts and payments account will be given in the question, and they will ask you to do income, expenditure and the balance sheet. That would be your 6 marks question. But last year they gave 4 marks question from this chapter where they asked receipts and payments account preparation. Again, that is easy. We will just go through that also. So mainly what you have to focus is preparation of income, expenditure and the balance sheet. Yes, so you give the heading financial statements of NPO, then which is the first one, give the heading receipts and payments account. So we will see what are the features of receipts and payments account. Okay, as the name indicates, the format is receipts, amount, payments amount. We know that receipts would be on the debit side, payments would be on the credit side. Last year for cash book and all we have drawn the same format. Okay, so receipts and payments account, actually it shows the cash receipts and cash payments. I have specified it as cash receipts and cash payments. That means this account follows cash basis of accounting. Last year you have learned cash basis. What do you mean by cash basis of accounting? Only when cash is received you will enter the item, or only when cash is paid you will record it on payment side. Payable, receivable items are not included under cash basis. So receipts and payments account will write only received and paid items. It follows cash basis of accounting. Then it is an asset account. It is an asset account means it is just like a cash account or a cash book, because it shows cash receipts and cash payments. So it is an asset account. The nature is an asset account. Then what we can write is it includes both capital receipts. Similarly, all capital payments will be included. Then revenue receipts and revenue payments. Everything will be included. There is no distinction between capital and revenue items. But when you do income expenditure, we will be taking only revenue items. So you need to know the difference between capital and revenue. Last year you have learned capital receipts, revenue receipts, capital expenditure, revenue expenditure. At least just go through the meanings. You just take your 11th standard textbook and just go through the meaning if you do not remember it. Capital receipts means the amount which we are getting from sale of fixed assets. That is capital receipts. Like when you sell a building or land, computer, furniture, when you sell fixed assets, what you get is capital receipts, and this will be non-recurring in nature. Non-recurring means it will not happen again and again. Like sale of building and all, it will not happen again and again within a year. Isn't it? After some years we might sell a building, we might sell a land, but within a year it will not happen at regular intervals. So that is capital receipt, and it is non-recurring in nature. What about revenue items? Similarly, capital payments means the amount paid when you purchase fixed assets. Okay. Then revenue receipts means amount received from sale of goods or services. Goods means the current assets we are selling. Earlier capital receipts means there we were selling fixed assets. Here it means revenue receipts means what you get from sale of goods, and that is recurring in nature. It will happen again and again. Okay. This sale of fixed assets and sale of goods, these are the transactions of a profit making organization. For NPOs, their transactions are different. We will discuss it. They are not going to sell a fixed asset. They are not going to sell goods and services. Their main activity is not selling actually, not purchasing and selling. Their activity is to serve the society. Okay. So what I am discussing now is the meaning of capital receipts and revenue receipts. So what you have to remember is capital receipts will be non-recurring, revenue receipts will be recurring in nature, like sale of goods, that will happen again and again in the business. At regular intervals we will be selling goods. So that is recurring in nature. So everything will be included under receipts and payments. So while you do receipts and payments, no confusions, everything you can write. If it is received amount, you write on receipt side. If it is paid amount, you write on payment side. No distinction between capital and revenue items. Everything will be included. Then the last point is it will include current year's figure, last year's, and previous years. That means every year we will include in this receipts and payments account. No distinction between current year, last year, previous year, everything will be included. That is why I told you this is easy to prepare. But normally question would be to do income expenditure. Okay. Yes. So these are the features, cash basis, then it is an asset account. You write these points just like this, you write in your book. Then it includes everything like capital and revenue, then current years, last years, previous years, everything will be included. Now you just take your textbook page number 1.3. The format is given there, receipts and payments account. The format you do not have to draw in your book, you just study it directly from the textbook, that is enough. No need to by heart, just go through the items. We are starting receipts and payments account with the opening balance. Did you see like two balance brought down? That's the opening balance which we are writing, and you will write the opening balance of cash and bank. So normally the closing figure would be the closing balance. Once you finish writing all receipts and payments, you have to balance this account, and the balancing figure you will write as by balance carry down. That's the closing figure of cash and bank balance. Did you see the last one on the credit side? Okay, that's a basic format. Now inside receipt side you have so many items like the received items. What you have to remember is you are following cash basis while you prepare receipts and payments. So you can write only received and paid items here. So here we have like subscriptions, the amount that we receive from members. Subscription means the amount received from members as part of renewal of their membership. Just like renewing their membership at regular intervals, we will be getting subscriptions. So that is recurring in nature, that is revenue in nature. So under receipts and payments, you don't have to think whether it is revenue or capital, everything will be included. And did you see under subscription, I mean below subscription, did you see like previous year, current year, next year, all figures are being included. You just have to see whether it is received and paid. Receivable, payable will not be included. Okay, so that is regarding receipts and payments. You just read the items, that is enough. Just read the items given on both sides. Okay. Next account you write income and expenditure account. That's what we have to discuss in detail. So income and expenditure account, though the name is income and expenditure, the format is not like that. The format itself, you have to be very careful. The first heading is expenditure amount, then come income's amount. Okay? Because we know that expenses would be always having a debit balance. So expenditure should be written on the debit side, income should be on the credit side. But when you write the heading, what should be the heading? Just write the heading in the middle, income and expenditure account for the year ended. That's a format of income and expenditure. I mean that's a heading of income and expenditure. This is the second financial statement of NPO. Income and expenditure account for the year ended. Here we will write the date. And always remember, don't make mistake while you draw the format, because from there itself the question will go wrong. Expenditure must come on the debit side, whereas for receipts and payments it's in the order itself. We will write receipts amount, payments amount, whereas here it is expenditure on the debit side, not in the order of its name, because expenses will be having a debit balance. Okay. Now format is given on page number 1.8. Just take page number 1.8 in your textbook. That also you just learned from the textbook. You need not copy it into your notebook. Okay. Now we will just see what are the features of income expenditure. The first feature is that it follows accrual basis of accounting. What is accrual basis? Last year you have learned this. Though cash is not received, you can include. Though cash is not paid, you can include. That means received and receivable, similarly paid and payable will be included in income and expenditure. Whereas in receipts and payments, only cash basis, cash received and paid only will be included. Here receivable and payable, like accrued income, that is receivable, that we can include here. Payable, that is outstanding salary or outstanding expenses, we can include here, because payable, receivable, received, paid, everything will be included. Then second one is it includes only revenue items. That means only recurring items will be including in income expenditure. So now you should know the distinction between capital and revenue items. In your question, they will give you all items, because they will be giving receipts and payments account in your question. It will include all items. From that, when you do income expenditure, you have to pick only revenue items. So you should know what all will come under revenue items. Then the third point, it will include only current year's figure. It is not like your previous account where you included all figures. But here you need to include only current year's figure. Then the last point is, it is a nominal account. What is nominal account? Debit all expenses and losses, credit all incomes and gains. So it includes expenses, losses, incomes, gains. Okay. So this is a nominal account because the heading itself is incomes and expenses, income and expenditure. So it's a nominal account, it shows expenses, losses, incomes, gains. Whereas receipts and payments account means that's an asset account which shows cash receipts and cash payments. Meaning also, if somebody asks you what is income expenditure, you can just write all these points there. Okay, for 1 mark question if they ask you what is income expenditure, what is receipts and payments, all these features you can write. Okay, so these are the features you must remember for income and expenditure account. Accrual basis, revenue items, current year's figures only, then it's nominal account. Then the format we will just see, which is given in page number 1.8. Expenditure side, we have 2 salary. Did you see? Then with that they have made certain additions and deductions because we know that outstanding at the end means what you have to receive this year, isn't it? Because there is a salary outstanding at the end of this year. If you have an outstanding amount of 20,000, that's the amount you have to pay this year. So which we will add this year. Whereas outstanding in the beginning means, in the beginning of this year, suppose you have rupees 10,000 outstanding in the beginning of this year, that is on 1st April 2019, you have outstanding amount of 10,000. That would be the amount of last year. That is why it is outstanding in the beginning. Okay. So this one outstanding in the beginning, that belongs to last year, which we have to less. Why? Because income expenditure account will consider only current year's figure. You understood? So what you have to do is, outstanding in the beginning means that belongs, you have to think whether it belongs to current year or not. If it is current years, you add, or else ignore. Ignore means less it. So since it belongs to last year's, outstanding in the beginning of this year means it is actually last year's. So we deduct it. Outstanding at the end means we have to pay it this year itself. Salary outstanding at the end. That means it belongs to current year, which we will add. Then other than that, what they have given us, rent, and you remember all these will be revenue items. So salary is revenue, that is recurring in nature. Rent also the same. Insurance premium, less prepaid. Less prepaid means if you have paid for the next year. Prepaid means paid in advance. So if you have paid for the next year, you have to less it. That's why they have deducted that. Then audit fee, that's a fee given to the chartered accountant or auditor. Printing and stationery, all these expenses are recurring in nature. It will happen again and again. Then we have honorarium. Honorarium means it is the amount given to a person who normally charges a fee, but now when you give it as honorarium, the meaning is we are giving it as a token of gratitude. Suppose you invited a guest lecturer, okay, and you will be paying an amount on a regular basis, not for a longer period, but on a regular basis for a shorter period you will be paying them. It is paid as a token of gratitude because you have invited them for giving some lectures for some months, for 2 or 3 months, and you will be giving some amount for them. It's a token of gratitude rather than a payment. So such expenses are known as honorarium, and though it is only for a shorter period, it is regular in nature. So honorarium is revenue in nature, that is recurring in nature. The meaning of all these terms they have explained in the textbook. In the coming pages you can see that. Then telephone expenses, again you know that that's recurring, revenue in nature. Repairs, again recurring. Depreciation, decrease in value of fixed assets. Every year you will be charging depreciation. So again that is on a regular basis, that is recurring in nature. Then loss on sale of fixed assets. See, sale of fixed assets, is it recurring? No. Sale of fixed assets is capital in nature. That I told you already. Whereas the loss or gain which you incur on the sale, that is recurring. That will happen again and again. Okay. Then sports materials use. Sports materials means if yours is a sports club or something, the sports materials which we are purchasing is a kind of expenditure for you, revenue expenditure. Then on the credit side we have subscriptions. Have you heard of subscriptions? Subscription means the amount which you receive from your members. You means the NPOs, non-profit organizations, receive from their members. Why? As part of renewal of their membership. So that will be received by the NPO on a regular basis, like half yearly or quarterly or yearly subscriptions would be received from the members. So it's an income for us. They are paid. Don't take it as expenditure. You are NPO and from your point of view, the subscription is an income. Then with subscription, they have made certain adjustments just like salary, because always remember you should take only current year's figure. So here what they have added is outstanding at the end. Outstanding at the end means it belongs to current year, that you have to add. Outstanding in the beginning, just like this, it belongs to last year, so we will deduct it. Then they have mentioned advance at the end. If you have paid an advance amount or if you have received, subscription means receiving only. So suppose you received an advance at the end of this year. Is it for this year? Are you receiving an advance? No. When you receive at the end of this year, that's advance for the next year, which you have to less. So they have written no less advance at the end. Then advance in the beginning. Advance in the beginning means in the beginning of this year, you got an advance amount. Okay, that is for actually this year. What you got in the beginning as advance is for this year, which we can add. Did you understand? So always think whether it belongs to current year. Advance in the beginning means it belongs to current year, we will add it. Advance at the end means it's for the next year which we are getting, so less it. So do one thing, you just write this format in your book, income expenditure, not that receipts and payments, that you just read the items. Income expenditure you write, because there are certain additions and deductions. So you write this format in your book. Then you have on the credit side, like income side, entrance or admission fee, and all these are revenue in nature, recurring in nature. Entrance fee or admission fee means it's the amount paid by members at the time of joining or at the time of entering the firm. Okay, and actually this is considered as recurring, but if you think in real situation they are paying only once. When they enter the firm, they will pay this admission fee. Likewise, every member will be paying, but actually it is not recurring. It is a topic of discussion. Still discussions are going on regarding whether it should be treated as revenue or capital, because in reality it's only paid once. So it must be taken as capital, but for the time being they haven't made any clarification. We have to take it as revenue itself. So admission fee or entrance fee, you take it as revenue, recurring in nature. Then general donations, the donations which you get from other institutions or from your members and all, and if they don't specify the purpose, that's called general donation, can be used for any purpose. General donations are recurring in nature, or that is revenue in nature. But if it is specific donations, like donations for building fund or donation for prize fund, if it is mentioned the specific purpose also, then you have to consider it as capital. General donations, revenue in nature. Then legacy is given. Legacy means it is the amount received or receivable by NPOs as per the will of a deceased person. Deceased person means person who died. As per his will, he would have written in his will, so much amount can be donated to this NPO. So that amount is called legacy, and if it is general purpose, you can take it here, or else if it is for specific purpose, it will be capital in nature. Then sale of old newspapers, rent, gain on sale, we already discussed loss on sale. So all these are revenue or recurring in nature. Then after you finish writing all these, what you have to find is the difference you have to find, the balance you have to find. If your income is more, that means you are having a surplus. That's why they have written no to surplus or by deficit. That's a balancing figure. If your credit side is more, that means it's a surplus, you will write the shortage here on the debit side to surplus, or it will come on the credit side by deficit. That's a balancing figure. So, you write this format in your notebook. Then the third financial statement is balance sheet. You just write the heading balance sheet. That's the third financial statement. The preparation is just like your normal balance sheet. Last year's balance sheet, you remember, no? Liabilities amount, assets amount. The same thing we will be doing here. There is no change in preparation of balance sheet. So, these are the three financial statements which you need to learn in this chapter. Problems will work out in the next video.